All right, everybody, welcome to Selecting an Option Strategy. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that you guys are all joining us here live today. I'm filling in for Connie Hill, who is taking a well-deserved day off. I do believe she will be back tomorrow teaching her regular schedule. So this is a one day only fill in for Connie. And we're going to talk about some bullish strategies today because the market's been very bullish. This is selecting an option strategy. So I thought we'd look at some bullish setups and then go through the thought process that might go through a trader's head and thinking about, well, which bullish strategy should I choose? Which might be most appropriate given the way the stock is behaving, the sector is behaving, the market is behaving, given my goals as a trader. Yeah, that's what we're going to talk about. We're going to look at some short put verticals, some long call verticals. We're going to look at some directional long call trades. So it's going to be a cornucopia of trading strategies that we are going to be checking out today. I do post, by the way, somebody said it was a nice surprise. So here is my segue to saying you should be following both Brent and I on X. I do post on X when I'm filling in for someone, and I did post this morning that I would be filling in for Connie. So not a big heads up, but beats poking the eye with a sharp stick, right? So my handle on Twitter or on X is Barb Armstrong CS. Brent is Brent Moore CS. He's a friend and fellow coach. He's riding shotgun in the chat today. He understands all these option strategies inside and out. So if you have any questions, don't hesitate to ask. If you're watching in the archives, you can type your questions into the comment section down below. I do look at those on a daily basis, and I'll get back to you fairly quickly. So without further ado, let's get through our important information so that we can get out to the platform. So this class does focus on options. It's called Selecting an Option Strategy. And you have to know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading capabilities if you're a client of Schwab, and not all will qualify. Okay, so we've got to take transaction fees into account when we're looking at options. In this class, we'll be using the Paper Money software application, which is for educational purposes only on the Thinkorswim desktop platform. But it is a brilliant place to learn, to hone your skills, and to become familiar with the strategy and the trading plan you are going to use when trading that strategy, and that both the mechanics of how to place the trade and then the thought that goes into managing that trade once you're in before you start placing trades in a live account. One of the differences between a live account and a Paper Money account is that short options will never be assigned early in Paper Money. Okay, here's my one announcement. This weekend, Ben Watson will be getting on a plane tomorrow, heading for Orlando. If you would like to join him there, it's a 2-day workshop. First day, all about technical analysis and trends and support and resistance, all that good stuff. Second day is about options. So I loved attending these things as a client. As many of you know, I came into this as a student, as a client who wanted access to this education. And, I've now been a coach since 2016. So you never know where the tide will take you, right? And the last event of the year will be Houston, December 13th and 14th. I believe registration may be full for these, but if you show up, I'm sure we will find you a seat if you live in the Houston or Orlando areas. Okay? And here's the link to register up here. And then we kick off the new year at the Gaylord Resort in Dallas. Okay? It's actually Grapevine, just outside of Dallas. So, yeah, so that's what's coming up. Let's go out now to the platform and have a look at the S&P. So what do you know? Hitting another new all-time high today. Up 27% year to date. Somebody said that they were getting sick of looking at bullish charts. Well, you can bore me all the way to the bank. Hey, I'd be happy if this just kept on rolling. But that's just me. Whatever the market does, we aren't trading what we think, we're trading what we see. And there's a lot of people smiling because they're looking at their 401ks and they're looking at their investments. And, you know, if they're bullishly invested, as many people in this country are, they're pretty happy campers. Yeah. So how about the NASDAQ? Hitting a new all-time high today. In fact, gapped up on the open, up almost 1%. You know, and this is our tech-heavy index, no financials. How about the Dow? Well, it's up 19%, not quite hitting an all-time high, but within a hair's breadth of it. So that looks pretty bullish also. And then how about the RUT, which we were talking about for years because it was going a whole lot of nowhere. Even it is up 19%. So, you know, and we've seen, you know, some would say this is a bit of a bull flag setting up. So, you know, had this dramatic move back up to the previous high. In fact, established a new all-time high on this index, has been kind of pulling back a bit, but still above the 10-day moving average. So hard to characterize that as anything other than bullish. And then if we come and we look at the VIX, you know, it's down at 13. Like, holy smokes, Batman. Like, that's the lowest we've seen it since what? Since July. Yeah, so that's, you know, indicating that there may be a relatively high degree of confidence in the you know, current economy. If we want to come and look at the sectors, and here I'm going to move my description over so we can kind of see what these are. But if we look at the last 3 months, who's leading the pack? We're back to consumer discretionary, communications. So that's like the Metas and the Verizons of the world. Consumer discretionary, Amazon, and all the retail guys like Target, et cetera, and technology. Those are the three leading the pack. Industrials and financials are, you know, tied for fourth and fifth, still up over 10% in the last 3 months. And then if we look at the last month, has there been a rotation out of these sectors? No. These guys are continuing to lead the pack. Consumer discretionary, financials, like here's consumer discretionary. So this index hitting a new all-time high today, also yesterday, the day before that, and the day before that. Financials, pulling back a little the last couple of days, but hit a new all-time high within the last week. Technology, new high today. Communications, new high today. So, you know, a lot of bullishness that we're looking at, right? Right. Yeah, somebody's saying, you know, that, hey, this just makes me smile. Yeah, me too. Me too. Okay, so what are we going to do with this information now? Well, let's come and look at, well, let's start with Starbucks, because for a lot of people, their morning starts with coffee. It may not be Starbucks in particular, but, you know, when we look at Starbucks, it's kind of been on the struggle bus this year, hasn't it? You know, it's only up 5% year to date, you know, and, you know, was kind of falling, and then it hit this 71, and that was its low for the year back in July, and, you know, up 40% since then. You know, we announced, I believe there was a new CEO announced, which resulted in this, you know, huge gap to the upside. And then it never really retraced, did it? So it kind of moseyed its way on up the hill. It's kind of broken above this resistance level that it's been flirting with for a while. Like if we hone in here, let me get my drawing tool. You can set up your charts the same way that I do. There's a question in the chat saying, is there a way of accessing the coaches charts? Okay, so I've been posting some things on Twitter or on X. I keep calling it Twitter. Sorry, guys. It's been X for a while. Let me just clear that off. Yeah, the CEO from Chipotle came over. So it came up into this neighborhood once, twice, and then, you know, it's kind of, it keeps knocking on the door, and then it's been flirting with it. And recognize that support and resistance are a range. It's not really a finite number, but it kind of broke out here on this day. And then it's kind of been coming back and flirting with it. And so this isn't, some would say, I look at this and this isn't decidedly bullish in that it hasn't been just marching up the hill day after day, but it would appear that this support, this resistance level may now be holding as support. And so if we're looking at a trading strategy, we may say, well, this could, continue to be kind of in a bullish but consolidating pattern. How might I place a trade that could profit from that, even if it continues to go sideways between, say, this 99 and 103? Well, could we do a short put vertical, where we're looking to sell a put at maybe 99 or below, and then define our risk by buying a put below that? And if you're new to any of these strategies, I teach a getting started with options class on Tuesdays at high noon Eastern. And you can go and I'll put a link into that series so you can catch the class on short put verticals. But let's go out to the trade tab and just see if this would be worth our consideration. So if we come to the trade tab and we come out to, say, December 27th, so we're in that 20 to 50 day time range. And what are we looking for? Well, I also have an example trading plan posted in the trade management mini sessions. And one of the things that it suggests is that we're looking for stocks that are uptrending, and Starbucks has been. And does it trade 1 million shares a day or more? Check. If we come out and we look in this 20 to 50 day time frame and look at these strikes here, which is what we're considering, do we have at least 20 times the number of contracts we're considering trading, or 10 times? We do. Do we have a tight bid-ask spread? In other words, is it less than 10%? So it could be up to 12 cents, and this is 6 cents. So we're going, yeah, we're good there too. This is a nickel, so we're okay. Excuse me. Let me just have a quick drink. Okay. So the next question then is, can we get enough premium? And our kind of general rule of thumb in this example trading plan is, if we're in it for 23 days, potentially, if the expiration date is 23 days away, we'd like to be able to get at least a 23% return. So if we come to this 99 strike and we say, okay, we're interested in selling a vertical at maybe a $2 wide spread, so 99 and 97, we get paid 53 cents. So, how do we calculate if that's worth our while? Well, we're going to say, how much could we lose? We could lose $2 minus the 53 that we're getting paid. So we stand to make a max of 53. We're risking $1.47. So our max return on risk is 36%. We say, well, that meets our requirements. So we're saying, well, if I'm looking at this in my trading a smaller account, and I'm just filling in today, so I'm going to put this in the other account. But if we don't want to risk more than $500, how many of these could we do? Well, we could do 3, because we're risking about 150 a throw, a trade. So I'm going to come to here. We'll make this 3. And then I'm going to right click. I've changed this to first trigger sequence. We're going to create an opposite order and say, hey, when this is worth about 10 cents, so when we've got about 80% of our max gain, we'd like to buy it back and take our risk off the table. Now, your example trading plan may say, I'd like, to get 90%. And this is one where, if you're up 75% and then it looks like the stock may be starting to pull back, you can always go in and change this exit. So we're saying we want to buy 3 short put verticals because we're bullish. We believe that Starbucks will stay above 99. We're selling them for 54. We want to buy them back at 10 cents. Do I have a short put vertical bucket here? I don't. So I'm just going to put this in, and then we can always create a group for it. But our max risk is $438. The most we can make is 162. Okay, so we're going to send that in. So there's our first example. And that is a short put vertical, which I like to describe as kind of sort of bullish or bullish to neutral. So we could trade double the contract size. So we could have done a $1 wide. And so, Andy, if you would like to compare those, and let's do that. Okay, so there's a question in the chat saying, like, why wouldn't we? And this fascinates me. So here we'd get 28 cents if it's $1 wide. So that's 28 divided by 72. Whoops. 28. I cannot type. This thing is my little arch nemesis. 28 divided by 72. So that's almost a 39% return on risk, where if we do the 98.97, we don't get 56 cents. We are getting 52. Now, this isn't such a huge difference. You're going to pay double the commissions. So you're going to pay an extra $1.30 per contract to get in and an extra $1.30 per contract to get out. So you're paying an extra $2.60 in total. And you know, the gain, the potential gain. Now, the advantage of the shorter strike is the higher percentage return. The downside is the likelihood of it going through both strikes can be higher. Yeah. So that's the trade-off. Anyway, that's that one. Okay, let's look at Unity. And, you know, I was laughing when Kevin Horner, who taught trading breakouts the last class, he brought that up as an example. And I have just posted this actually on X earlier today. And so just to give you an example, you know, of the kinds of things that, you know, you might see. I had scrolled back here last. So we might look at Charter also, which is breaking out. But with Unity, we have this cup and handle pattern, right? And the range, and we're just pointing out different patterns that we're seeing on the chart. So if you're wondering, like, why follow someone on Twitter, that, you know, might, you know, give you an idea. But like I said, or just showed you, you know, here we have this cup and handle pattern. And a technician would say, well, if I have a range here of about 9, the expectation is that this might move up $9 from 23 to maybe 32-ish. Okay. And so could we do something like, because this is a $23 stock, we can probably afford to buy a call, even if we don't want to risk more than $500. And could we say, well, it may not get all the way to 32. What if we made our target 31? It's currently trading at 26. And then where would we put a stop? You know, well, we might say, well, hey, if I were to buy a call on this and look at putting a stop in, I'd take a look at this 23.29 and maybe say, hey, if it goes 3% below that, I would want to get out, times 0.97. Well, times 97. So 22.50 $22.59. Okay, so that would be our stop here, $22.59. And so if we come to the trade tab and we come out to January and we say, okay, rather than buying 100 shares of stock, which would cost us $2,600, could we buy a call? And in fact, here we could buy 2 calls at the money and we'd be just over 500. So we're looking to buy 2 calls. And then I'm going to make this a first triggers sequence. And we're going to put our OCO order in, create an opposite order. We don't know exactly what the price of the stock of this option will be if it goes up and hits $31 or when it goes up and hits $31. It may never get there, which is why we position size for max loss. So we're saying our target is 31, or we want to get out if it goes below 22.59. Okay. So when we come to confirm and send, we're saying we want to buy 2 calls because we're bullish, right? Right. Like I say this stuff out loud to myself in an empty house when I'm placing trades in my live account. You know, like walk through it and, you know, you're both seeing it and then hearing it. I want to exit if it goes above 31. It's currently trading at 26, so that makes sense. Or if it goes below 22.59, that's below that support level. We're going to put this in our long call group. And this is a target based on the cup and handle pattern. Okay. So that's just a note to ourselves. If you're saying, why did we put a top? So Jenny is asking how we put a stop on our option. In this example, we're putting the target and the stop in. We're putting in both a target and a stop. We're saying we want to get out if it goes above 31 or below 22.59. And we're paying about $2.50 per option for these. Okay, so, and you might say, well, how much might I make? Well, I like the way you're thinking. So we could come over here to Theo Price and say the first thing you do, because we get this little grid that comes up, is reset it. And we're going to say, excuse me, this pattern took a while to set up, but it seems like today it's up almost 8%. Excuse me. All of a sudden I have this tickle in my throat. If our target is up here, sorry, let me just draw it. So I just draw the line kind of anywhere and then put the value in and say, this is my target, and show it on the right. So, you know, this is not likely to happen in a couple of days. Let's say it takes until December 20th. So we're going to come here, that's 16 days. We're going to say, what if by December 20th, this comes up by about $4.80 a share? Now, I'm just like spitballing here. So this option that we paid about $2.50 for might be worth in the neighborhood of $5.60. Now, we haven't changed volatility, and if it takes longer, time decay will chip away at this. This is just a guesstimate. But we could end up with a return of over 100% if it goes up and hits that target in this kind of time frame. Now, what if instead it goes down and hits our exit of $22.59? So let's say it goes down by $4 instead of going up. goes down by $4. That would put it at 22.34. And our exit is at 22.59. Well, now, and this is, by December 20th, this might be worth about 45 cents. And if we paid 250, 45 divided by 250, that's about an 80% loss. 82 if you want to get picky. So, it can go either way, but this Theo price, which you find on the trade tab. Yeah. So Fred is asking, could I have used an OCO order? Yes, I could have. The reason I put it in the way that I did is it's just easier when both the target and the exit are based on the price of the stock. Okay, but you could have said buy call with OCO. Absolutely, you could have put it in that way. Often on the Thinkorswim platform, there might be 3 or 4 ways that you can, place a trade, the exact same trade. Okay, so we've done 2 trades. We've done one on Unity that was a long call, and then we have done one on Starbucks that was a short put vertical. So let's go now and look at SMCI. No, let's look at CrowdStrike. We'll look at CrowdStrike and then we'll go and look at SMCI. But we see something that, it kind of fell out of bed here, came down from like almost 50%. Like this was close to 400, came down to $200.81. Like that's a pretty humbling drop. This was, when we had the blue screen of death Friday and all the airlines and, it was a hot mess. But, they seem to be recovering nicely, don't they? And we just had earnings. And so if we wanted to look at the news, I usually leave this up as a column. So we could come here and see, are they raising price targets? Well, here, Argus raised their price target from 325 to 388. And so we could do this a couple of ways. You might say, well, I could do a swing trade from this 364 to 377. I could do a trade back up to this previous high here around 398. Or I could do a long call vertical thinking, I think it's going to continue to the upside. And you may say like, geez, I wish we'd placed that trade yesterday. Well, yeah, me too. But you know what? Like we weren't talking about this yesterday, were we? Yeah. So, you can only deal with where you are today. And so if we look at this and say, this is at 364, chances are if you're in a smaller account, or you don't want to risk more than $500, chances are you're not buying a call. Why do I say that? Well, because like here, even these calls expiring in 23 days, the first strike at the money is $1,490. The first or the at the money strike here, 1,200. The first strike out of the money, 1,000. But could we look at this and say, this is already at 364.60. Could we buy a vertical? We're paying $258 for this thing. And it's already almost through both strikes. And the idea with a long call vertical and the way we tend to put them on, or the way I tend to put them on, and you can be more aggressive. So this is a little more conservative as you say, okay, I'm going to buy this strike at 360. I'm going to help fund the purchase of this by selling the first strike out of the money at 365. And as long as it goes through both strikes and stays above them, you'll end up with a profit. Or that's the expectation. We have only 31 cents to go to be at this top strike. Excuse me. So when we look at this and the price is, well, now 263, Our target on these is 50%, as in a 50% gain. So we're going to do 2 of these, single order, first trigger sequence, right click, and we're just going to take our 265 that we're paying and say, when this goes up by 50%, by 1.5, we want to get out. So that's 397, 398. And you know, that's a potential gain of 50% on your risk in just over 3 weeks. That's not too shabby. If this trade works out, we're going to make this good till canceled. Now, on the flip side, we're going to watch these daily, and if it goes below, if we're now down 50%, we would exit that position. And I don't know if I have long call verticals in here. Yes, I do. Okay. So fire in the hole. So how much could we make? 474. And we're saying, hey, you know, we don't need to make all of that. If we could make 274, we'd be happy campers. Yep. And how much could we lose? 526. So you might say, well, how come you're not putting in an OCO order? And the reason, you know, to get out if it's down 50%, when the market first opens, there's often a lot of volatility in the market. And I have seen in my live account situations where I was stopped out for much bigger than a 50% loss. And then the market settled down and I wouldn't have been stopped out maybe at all. And that is really painful. So if I get stopped out for a 50% profit, I'm willing to, you know, to manage that. And so instead of, and I'm just going to come over here to the other account where we do kind of manage these. So we're going to look at these every day. Here's our long call verticals. And we're going to say, are any of these up close to 50%? Nope. Are any of these down close to 50%? One of them, Steel Dynamics. So we're going to come out, look at STLD. We're down 40%. And I haven't put this one on my chart. So our strikes are at 145 and 150. So with the degree that this moves, is it possible that this could bounce tomorrow? So we have our long call vertical on this. And the idea here is if you're wrong, admit it quickly. Why lose 100%? You know, you're better to get out with 50%. So, and that's how long it takes us to monitor those positions. And so tomorrow we'll go look at them again. And if this one pulls back again tomorrow, then chances are we will exit. No harm, no foul. You know, so that's how we're managing those. Okay. So we have done now 3 trades. We've done a long call vertical on CrowdStrike, our short put vertical on Starbucks, and the long call on Unity. Now, I said we'd talk about SMCI, so we might just be able to squeeze in another one. So this stock is still up 46% year to date, even though it got absolutely annihilated. You know, we can see here it hit a high back in March of 122. It came all the way down to $17.25, down by 86%. Like, ouch. So this is when you applaud yourself for having rules. Okay. So if we look at this and we say, well, this has been in this downtrend and it looks like it's breaking out. Now, someone might say, well, this is your 100-day moving average. And even though it's above the 10 and the 30, it's not above the 100-day. So I'm not playing. Well, your choice. But could you say, okay, it crossed the river, came back and just briefly tested the ice. Like, so we had a bullish day, bearish day, looking like it's moving up again. this is a volatile stock. Like when we look at our options on this thing, and let me come back to my basics. Actually, with probability of in the money, when we look at this, like the December 27th, 129%, 130% is our implied volatility. So what does that mean? It means even though this is only a $40 stock, these are expensive options, but it means that they can move a lot. How much? Well, in an average day, the ATR on this thing is $4.63. Again, this is a $4 stock. That's over a 10% move this stock has had in an average day over the last 14 days. Holy smokes, Batman. Like that's, it's not for the faint of heart. Now, this is saying that we have earnings coming up December 5th. But I had a couple of people say that earnings is actually not going to be December 5th. Well, this was August 6th. So, if we go with this, we might say, well, you know what? I'm going to wait until after earnings, because earnings is tomorrow. And so you can do that. It's, but it's an interesting one to watch given that, this last earnings, it didn't move, an extraordinary amount. But this will be an interesting one to watch because it has broken out. What other ones might we want to look at? Yeah, somebody said they keep changing the date. But one would think that earnings is imminent. So here we have American Express. So I want you guys to type into the chat which strategy you think might be appealing. This stock is up 61% year to date. If you're not familiar with what sector it's in, we can come to the Analyze tab and Fundamentals. And if we scroll to the top, oh, I've got the overview closed, that's why. It'll say, it's part of the financial sector, which, has been crushing it. And it, like that sector, has pulled back a little bit, but we have this spinning top today. So could we maybe come out and sell a short put vertical? Or could we do a long call vertical? We could do either one. The options are likely to be pricey. But could we get below here, below this 297? Say if we come out 3 weeks, the 295. And again, we're at 700,000 shares. Do we have a tight bid-ask spread? Actually, that's kind of wide. 40 cents. We don't really want it to be more than 25 cents. And so we might say, well, it's not over $1 million. It typically would be over $1 million, but this double the width of the bid-ask spread, this is breaking now one of my rules that I don't like to break. And so you might say it looks good, but I'm going to pass. Now, if we, so what might we do? Well, we might look at a shorter time frame. And this is only 2 weeks. We might not be able to get enough premium here, but the bid-ask spread is tighter because it's a monthly and there's more volume. So we get 57 cents, on a 250 strike. So, if we're looking at is the juice worth the squeeze, we say if I can get 57 and I'm risking $1.93, that's over a 25% return. It's almost 30, and we'd only be in it for 2 weeks. So what's the advantage is that time decay will be moving at an accelerated rate. The issue is if the trade goes against us, not a lot of recovery time. So we're going to do 2 of these. Right click, opposite order, say, hey, when this is worth about 12 cents, I'd like to buy it back. Okay, and short put vertical bucket, there we go. All right. Well, guys, yes, SMCI had some good news on the accounting fraud charge fiasco that they had been facing, which maybe, have led to this breakout to the upside. Okay, so guys, we've done a lot in our time together today. We've done two short put vertical trades, one on Starbucks, one on American Express. We've looked at CrowdStrike and SMCI. And we've done a trade on Unity. And when I come to the other account, you can see here are, the three trades, or the two of the three trades that we filled. The one on Unity where we bought the long call and the long call vertical. So I appreciate your patience with me as I filled in for Connie today. Tomorrow I will be teaching long verticals. Up next is market and sector analysis with Mike Fairborn. You'll want to stick around for that. Please hit the like button. It helps move these classes up in the algorithm so that more people can find it. Subscribe to the channel if you haven't done so already. That little button in the bottom right corner. It's free to subscribe. And then, of course, don't forget to follow Brent and I in the land of X. I want to thank Brent for all his help in the chat. You guys have been keeping him busy. And I want to thank the people behind the scenes for helping bring this class to life. So, and of course, thank you to each and every one of you for investing in your financial future by showing up for a class like this. Take care, everyone. Bye for now.